Good morning. This is the Elliott Wave update for the Dow Jones 30 being recorded on Sunday, May the 18th at 9:30 a.m. Pacific Daylight Time. I'm here on the cash market and I'm here on my maximum monthly chart. So it's showing all the data that I have available. That data goes back to 1902. So basically, we have the advantage of seeing 123 years of rally, which included a lot of nasty declines, a depression, severe recession. We had a great financial collapse. We had a pandemic, all kinds of things still within this larger multi-decade, likely to be more than a century, which it is, of a grand supercycle third wave. Now, for those that maybe this is the first time that you're checking out my work, I'm going to start on the largest picture that I have, which again is this maximum monthly chart that I have, going back 123 years. And I started this at the same place that R.N. Elliott put his grand supercycle start. And that was grand supercycle wave 1 completed at the 1929 highs. Grand supercycle wave 2 completed at the 1932 lows. Now, really, in today's world, I'd be thinking a grand supercycle wave 2 should take longer than 3 years, right? But this is how we start. And so now what we're working through is grand supercycle 5 waves up. So we're in grand supercycle wave 3. What's that going to consist of? 5 waves of supercycle degree, of which we have 1 and 2 in place, which means we're in supercycle wave 3 of grand supercycle wave 3. Continuing on, what's going to be in supercycle wave 3? 5 waves of cycle degree, of which we have 1 and 2. So we're in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So you can start to see how we get the 3 of 3 of 3 type moves, where our market will get the bulk of a rally. Now you can see it's on 3 large degree levels. So what's inside of a cycle third wave? 5 waves of primary degree, of which we have 1, 2, 3, and 4. So what we can say is that we're in primary wave 5 of cycle wave 3 of, and then of course to fill it in, of supercycle wave 3 of grand supercycle wave 3. Now we want to deal with, okay, within primary wave 5, now I can bring it down, stick it on the 5-year chart. I can't actually yet. I'm going to go back out to that maximum. Okay, so here we have the great financial collapse that we had in 2008, 2009. That brought us down. The Dow actually had an irregular B wave as a part of primary wave 4, and that it went to a new all-time high all by itself. The S&P equaled the high, maybe slight irregular. But here's wave A, wave B put in a new high above primary wave 3. And then we just came slicing down as quick as possible in this collapse here. And I was there. I was trading at that time. And I have to tell you, I was also trading in a lot of other periods of time as well, like 1987 and a lot of other areas within all of these intense cycles. But this one, it was pretty wild, to be honest with you. It's where we saw banks go from really high levels down to bankrupt. We saw bank failures. We saw bank mergers, takeovers. JP Morgan Chase That's when that all happened, I believe. We saw Bank of America get merged in. We saw Wells Fargo get merged into. They kept the more prominent name, but Bank of America was purchased by Nations Bank, which is based in Charlotte, North Carolina, which is why we saw at that time Bank of America's headquarters go from San Francisco to Charlotte, North Carolina. So all these things that happened within this period. And now look at where we are. So we're in primary wave 5. And within that, there are going to be 5 waves of intermediate degree, of which we have intermediate 1, 2, 3, and 4 complete. Now I can go down to my 5-year chart. So let me just say, primary wave 5 started in April of 2009. So primary wave 5 has been in the making for 16 years. Where are we inside there? We are in, I'm going to go down to my 5-year chart. There's intermediate wave 3, intermediate wave 4, which bottomed in October of 2022. So we're inside intermediate wave 5 of primary wave 5 of cycle wave 3. Now, that just takes us to there. We don't really need to go much higher than that. Now, within intermediate wave 5, it will consist of 5 waves of minor degree, of which we have 1, 2, 3, and 4. So now we're getting even closer, right? So now we're in minor wave 5 of intermediate wave 5 of primary wave 5. We're getting pretty dang close. So now I'm going to break it down even more. I'm going to come down to the daily, and that shows us how we have 3, 4, and I left this here because this is the cash market, and that's a slight higher high, very slight. So I could put this down as 4 inside, put the 3 all the way up to here, put the 4 over here, put the 5 there with all this balance, and it's still an ABC down. So no matter what, we have minor wave 4. Now, we're in minor wave 5, and that'll be made up by 5 waves of minute degree, of which we have minute 1 and 2 complete. And now we're still sitting, waiting for the completion point of minute wave 3. And this is where the counts may differ just a little bit. If you've already checked out the S&P, and if you're a member, a YouTube member, then you probably have already watched the weekly update. So I'm going to bring this down to from the daily to the hourly, and that takes us inside this 3rd wave. So in the S&P, in the NASDAQ, I'm looking for the completion point for this minute 3rd wave as a part of the minor 5th waves going up. And then that's going to give us a smaller, but still should be impressive, minute 4th wave correction. Now, here in the Dow, as best as I can see, now I went over to the 15-minute chart just to see the makeup of what we did coming up. Actually, I had to go to the 30-minute chart because I couldn't get enough. So there we have it, 1, 2, 3, 4, 5. I have to put a 1 there, because look at what we've done. We've gone substantially above that level. And so I have 1, 2, these are sub. This is minuet, sub minuet, 1, 2, 3. So we're still going to do a 4th wave, but I'm not looking for it to come down as far as the others will, because it's of a smaller degree. So it's going to get interesting, because I'd be looking for a small pullback, a rally back up, likely starting to get to, I'd have to have clearer markers, but right now this minuet wave 5 projects up to 43,535, because we're sitting pretty much at the 100%. So again, if we did a very small, came back up and put a 5 in, I would then be able to say that a possibility that we have this minuet wave 5. And so let's just say the following. We finished up the week at 42,655, I'll call it. If we kind of come back to maybe 23, 42,323, that's going to be a 300-point drop. Not all the end of the world for the Dow as the other markets begin to correct. And then probably rise back up, finish this up, put the 4, get the 5, even if the 5 comes in 236, let's say. And then we rally back up. Gets us a little bit more. That'd be 1, 2, 3, small 4, get up and get the 5. Then we put the 5 sub minuet, the minuet 5, and that minute wave 3. And that could then get back in alignment with the other markets. What's really kind of been affecting the Dow more than the other markets has been United Healthcare. United Healthcare has lost. It's just dumped about 50%. They're having problems. They've got a lot going on, and so that's had a negative effect on the Dow, of course. But we'll see what happens. We'll see if they can catch up, get everybody into the same count. We get a little bit larger of a fourth wave. When that one kicks in, then we would be looking, depending on where that would come in to complete this minuet fifth wave up to finish up that third. We'd be looking for it to come back down towards this level, a little bit larger of a pullback. And that's kind of what I'm looking for in the S&P and in the NASDAQ. So, but they also might have one more little pop higher to complete this minuet fifth wave and then put that third on top of it, also in the S&P. Okay, so everything kind of still is on schedule. What I will add to here that this is all technical. So on a technical basis, yep, looking for a little bit more of a high here to finish up minuet wave 5 and that minute third wave coming back down and a minute fourth wave going back up and a minute fifth wave. And that's the one. That's the one that I would be expecting new all-time highs. And here in the Dow, we got to get above 45,000. So it should be pretty dynamic. And what I would kind of suggest there is that maybe we get a little bit of a turn in United Healthcare. Maybe there's a recovery. Maybe we'll get some type of a report from this investigation by the Department of Justice into possible Medicare fraud. I mean, it's one way or the other. Either this is going to sink the Dow because it's going to sink even further in United Healthcare, or it's going to get some resolution, it'll be decided or whatever the situation might be. So either way, I think we're still on track for all the indexes to finish up, make new all-time highs, and then going back out to this one to finishing that minor fifth wave up to finish the intermediate fifth wave up. Believe it or not, I have to go back out to here. But let me just do one thing. Max available, I'm going to go 20 years on a weekly. Let's see what that gives me. Yeah, that gives me enough. So there, I have that primary, and then we're in that larger intermediate. And so, yeah, I think we can get this done and then set up the stage for a much larger, again, got to go all the way back out here. Once we complete primary wave 5 and that cycle wave 3, that would be the pullback. The cycle fourth wave pullback. That's what I'm looking for to come back into this price territory. So again, whatever's going to happen up here is going to be strong enough to produce a much longer term correction. And there's plenty of things to feed it. Let me tell you, we have. Now, on a fundamental basis, and I'm going to just bring this down so we're kind of looking at something like from there. On a fundamental basis, started to reach some notes. We have been seeing some sales. We've seen the 30-year bond and actually the treasuries decline, which is pushing the yields higher, which is based on a lot of different things. Number one, the dollar weakness. We've kind of come back above 100, but we were down closer to 98 for a while there. That is not anticipated. That is anticipated to pick up again. We're looking for the dollar to weaken one more time, or several more times, I guess. But what's going on at the same time, I'm reading some reports that the Fed, the Federal Reserve, was in buying the 30-year, buying the 30-year bond. Now, they're just it's its own way of quantitative easing, by the way. A little bit, you got to kind of work it around, but that would be considered as a part of quantitative easing. I actually believe that it's the federal government stepping up and buying the treasuries back that China is looking to get out of, looking to sell. And number one, it supports the market. Number two, it's the government reducing the debt. And all things considered, it should eventually work out to be more positive. Now, further sales, a further deterioration of the good faith and credit of the United States may be coming, because we also, I heard and read that Moody's, this is on Friday, downgraded the United States government. And I'm quoting what they said. And they lowered the credit rating of the United States due to the fact that, according to Moody's, the government's failure to deal with the growing debt of the country, which I believe now is somewhere around 34, maybe even higher, $1 trillion. That's a lot of money. That's a lot out there in terms of debt. So the good faith and credit of the United States is in question. And we have a trade war, not just with a handful of countries. This is a trade war with the world. Right? If you go back and you look at tariffs, they're like everywhere on all countries that we import from, or even export to. So there's just been all these negotiations just to work out the tariffs, which supposedly is just going to lead to the success of the most beautiful, great bill, whatever the title is, which is stalling in the House of Representatives due to some, just a lot of, they want some changes being made, but still is expected to pass, which is not going to lessen the burden of the national debt. It's going to add to it. Now, why we're seeing all of this stuff with the government being cut back by entire government departments being shredded and likely closed, because it's supposedly to help pay, right? The government's not spending the money. Well, let's give these tax breaks to the very wealthy in our country. And therefore, we're not really, having to worry about the deficit. It's like, I don't know, kind of not going to work, I think. But in any case, this is kind of what's going on a fundamental basis. The downgrade in the U.S. credit rating, it was brought up by one of the members of my YouTube channels, that the last time this happened, the market, I think, dropped 10%. And so are we in store for that? Well, yeah, we could. But guess what? It's kind of right now, I'm thinking the initial will be a reaction to what we have, that news, but it'll only come in the form of a minute fourth wave. So again, putting it here and then bringing this down to the daily, I'm thinking we get up, we top out on minute wave 3, we come down into minute wave 4, brings us back to here. That's still, right? If we're thinking a 10% drop from where we are in the Dow, well, we all can do the math. Should that bring us back to 41,000? We're at 42. Probably be looking for maybe a little bit more. I don't know. But I mean, we can do the math, right? We're at 42,000. 654 times 10%. It's 4,000 points. And I don't think we're going to come back to 3,800. But I do think we can come back to, even if we said that we're going to just drop 5%. All right. So I don't think that we'll get the larger here. But 5%, that could bring us back to 40,000 or 41,000. So I think that, yes, I think these pullbacks are likely. I think I'm calling for them as we finish up this minute third wave. But what comes after is, of course, is a recovery in a minute fifth wave up. And that's the one that I think is going to take all the indexes, right? The NASDAQ, the S&P, and the Dow up to new all-time highs. And that would also suggest the Qs, the spiders, the diamonds also are going to go up to new all-time highs. And it's at that level then that we're finishing minor wave 5, intermediate wave 5, primary wave 5, and cycle wave 3. Then we get the big kickoff. Then I'm looking for a much, much deeper, longer, in terms of time, corrective phase. Actually, those of you who have followed me for years, I got to tell you, this is a high. No, not there. This is the high back in 2022, where I felt that the market was completing primary 5 and cycle wave 3. Well, I was a little bit off. And so we got an intermediate degree third and an intermediate degree fourth, and now we're coming up to finish it. But once done, this is the area that you would expect the correction to get back to. That takes us back to 6,500. We would be trading above 45,000 when we're ready to start the drop. There will be a lot of time in between. There will be a lot of adjustments, I think, to where the market can get to. Fibs will come, but the initial fibs would show that we should drop between here. That includes that. That's all a part of the previous fourth. So we can actually take it from 13 or 14,000 down to 6,500 or thereabouts. Yeah, 6,500. And that's a pretty wide window for the market to drop. A lot of things fundamentally happening that would go in with the market making that big of a move. Much of it generated by government action, actually. So it's just a lot of stuff yet to come out. But getting more to where we are now, I'm going to go back to that daily. So what I'm looking for is, here we have all kinds. We do have support and we do have resistance. I'm going to just bring it down to my hourly chart, and that puts us inside of the finishing stages for this minute third wave. So again, if I'm looking at the third might come down small, come back to 42,450-ish, and put a fourth wave in, put a fifth wave, go back up, get above where we were last week, get up maybe above 43,000, maybe 42,800, 46, somewhere in there. Once I get a small 4, I can connect it to wave 1 and give some idea as to where we should end up to finish minute wave 3, or minute wave 3 is actually going to finish already. So we have both. We have both that we have to live by. And the reason is that in the S&P, we have to allow for one more little pop higher before we finish minute wave 3, before we begin that fourth wave decline. But no matter what, this is the area that I'm looking. There's the teeth, the box is right there, that I'm looking for this minute fourth wave to come into. It's not all that severe, but might be enough as the market and everybody else tries to digest the credit rating change. So, and then we get that fifth wave. Now, what do we have? We've got, for minute wave 3, our next level really is 43,745. I'm hoping that it doesn't go quite that high before we begin, because that would take longer. I think, to get up there, but maybe I'm wrong. Um, but all of these would kind of disappear. Once we get this three in, this comes off, these come off, and we have a new set. So if I'm looking at this, the minor fifth wave would be 100% of minor wave one at 43,034. I think that's going to be exceeded, obviously. Then the next up would be 1.618 at 46,704, and that's a new all-time high. So I'm looking for above 45,000, and we would be able to fill all of that in once we start getting these internals done, i.e., a minute fourth wave in. Then I'm going to connect my minute wave one to four. And let's not forget, minute wave one was pretty big. So we're going to be connecting here over to wherever this ends up, and that's likely going to project up quite high. So wherever that fourth wave comes in, we're going to connect it. And this was over 3,000 points. So for here, we're at, don't get me wrong. We also could come up in a fifth and it ends in a failure. And I think that's not going to be so hard to take because this has been laboring to get up here. We're battling against the possibility of a recession. We're battling against now a downgrade in the credit rating of the U.S., and we're battling against the fact that we still are in a trade war. And nothing has really been settled. And, fundamentally, there's still just tons of unsettled things. Now, what else could affect our market next week that starts to kick us off? Well, we have Target. Well, Walmart came out, talked about the tariffs, talked about how prices are going to go up. President immediately responded and say, "Oh, eat that cost, eat the tariffs. Come on, we don't have to, say you're raising prices." It's like, really? Yeah, they do. They're a corporation. They're trying to make money just like you are. So, yeah, pass it on to the consumers. So, but we have Target and one other reporting earnings that likely are going to come out and say the same thing. Prices have to go up because everything comes from somewhere else. Very little is produced here in the United States. So just because of how our trading partners. So that's the other thing. The disruption is just in an effort to force everything to be manufactured back here in the US. The whole game plan is like great on paper, but not really functional if you're going to try to make sure that all happens. We'll see. So we have enough to drive us up, but we also have enough to cap it. We also, just because we have enough uncertainty that it might be a struggle once we get to certain places, but we still have some earnings reports come out, and most important, or not, I didn't say most important, but big on that list is May the 28th, and that's NVIDIA. And then we're going to start to see the other, is AMD going to perk up? Is anything with the chips, all the chip makers? If NVIDIA kind of comes through and says, "Hey, we're dealing with these tariffs, we're okay, we made a bunch of money, and we're not really going to get stuck paying any tariff prices, exporting our chips back over to China." We shall see. So both counts. So, but we're close, folks. That's the bottom line of my message is we're close. Right now, we have resistance at 42.62, 43.34. And I'm thinking that should contain what's left to get the finishing point of that minute third wave. And that could happen Monday. But if it doesn't, and we start to drop down and we go below 42,296, so let's just say really strongly below, let me put this back down and get that to exactly what it is. So 42,323. We go a little bit too far below that, then we're starting to come in. In fact, actually, there's wave one. So we really can't even come very far. So maybe we've already done, and this is, I should be putting this a little bit different. A 4 and a 5 going to go in here. So maybe we don't even get close to that because that overlaps wave 1. So I didn't notice that before. Now I'm noticing it. So this actually probably is going to go up a little bit, and we're going to stick a 5 on it. Yeah, because this is just, it's getting a little weird because this has got to be higher, and then that degree can't be down into here. Just not going to work. So let's see what happens with the Dow. I might have to switch, might have to move this stuff around. This 3 could go down to there, the 4 would go over there, and this becomes 1, 2, 3, 4, and now we're in the 5. In fact, that's kind of what I'm going to have to do here. So let's, while I've got you all on, let's go ahead and do that. Nope. Activate, put that down there. Gotta make it all work. And it's just, it's not redrawing, but it is bringing everything back into line. So again, the 1.618 comes into 43, and this one's already been taken out. So I'm going to take that out so that we're not staring it in the face anymore. And this changes our picture a little bit. Activate, put the 1 down there, put the 2, activate over here. And that comes down equals, put the 3 and the 4. So actually we're in the 5. So this, it's going to be, now we're more in alignment. And the 4, I think it's crazy, but I'm going to allow for it. And we're going to put that 4 right there. Now that makes it a little bit easier. Now I'm not forcing this. I'm just saying that rearranging how we've got this. And this I'm going to take off. And now I'm going to put this on. So we go there. No, not there. I go like this. There to there to there. Slight. And so there. Just a little bit higher. In fact, we've gone over the 3 and we could be done. But now let's leave it out there for what this 5th wave might look like. Then we're going to start that minute wave 4. Now we're just in alignment between fundamentals and the technical to get everything in alignment that we could actually kind of come down. And I don't think we're going to go too much higher than that. So I'm just going to leave the 100% at 42,844. We continue to have about just above that at 43,000. So we get a little bit of a bounce, which I'm expecting actually in the other markets as well. And then we come down, finish that 5, and then we come down. All right, so that's the Dow. Taking it back out, and let's take a look at the daily. They're all still in alignment. You can see these have been pretty powerful rallies. But yeah, look at that daily 200. It's still flat. So it's just, I'm finding this incredible that we're getting ready to kind of poke our nose into new all-time high territory. And we have a 200 that just cannot get off the mark. We have the 50 that is now turning higher. But the only thing that's really gone above is the 8. The 20 is still working to get above the 50. Well, then it needs to get both of them above the 200 to give us that final push, or to assist in giving us that final push. If it doesn't, then you're going to be more certain on that what we're finishing up there is, again, all of those waves, but the degree of that finish is going to start strongly. In other words, it's like once we hit those highs, it's not like, oh God, we're breaking out. It's going to be, oh God, we're finished, and look at the decline that just started. So I'd be looking for something to kind of kick in and be pretty strong. But again, let's wait to see where it is and how it's going to come in. So making the slight adjustment to label puts us back into, we're in the sub minuet wave 5. That's once complete, that's going to finish minuet wave 5 and minute wave 3. And then we are going to be looking for that decline to bring us back into here. And that could coincide with digesting and realizing, oh, we just had the credit of the United States downgraded by a third agency, right? Don't forget the S&P 500, the S&P Standard and Poor's, along with Fitch. They lowered in 2020. They lowered that credit rating in 2024. So here we are again. 2025. I'm going to do it one more time. All right. So I actually am going to finish it there. And the next update will be in a week. I do have some plans, by the way. I'm just going to mention them now, to rearrange the memberships because I want to begin to really offer a live stream. And that's where we're kind of meeting as a group and sharing. But it's watching. I mean, my screens would be showing for trading, but it's just being able to share ideas in real time. And so, and I'm also just rethinking and redesigning how I want to work the memberships. And so my first thought is like $1 a day. So it's like for $20 for the month, and that would be for everything. Everything that I publish would be included and increase likely because I would have, I would have the incentive to have enough memberships that just to really fill in a lot. But it's picking up the Nasdaq, it's picking up the S&P, it's picking up the Dow, it's putting back on the Russell, it's dealing with gold, silver, and platinum, it's taking a look at treasuries. So all of the work that I've already done in the past just gets renewed, brought forward, and put out there on a membership level, and at the same time offering a really sweet price to be a part of the live stream as well. So any comments or thoughts would be great. But right now I'm thinking about $1 a day. So that equals there's 20 trading days in a month. So it's for $20 a month, you get everything, all of the analysis. All right, that's going to finish it up for this. The next update here will be in a week. Oh, also in memberships, it would turn into a daily, and it would be the YM. And the weekly would be the Dow and the YM. All right. Next update outside of whatever everything I just said will be next week.